Great, welcome to the pre-market overview, Tuesday, September 29th, 2020. Hopefully the markets are treating you well so far this week. Today we're going to delve into our newsletter and understand what we can expect from today. So for those of you that aren't already subscribed, if you would like to get the newsletter for yourself every day and get the document that I'm about to go through updated every day with those days information on and technology on, then you can email us at newsletter@tradewithufos.com and we will put you on that mailing list. So you'll get it every day before the market's open. So my name is Becky, in case you didn't know. My email address is becky@tradewithufos.com. There's also the support team, support@tradewithufos.com. So if you have any questions about anything we cover, you can obviously email either one of us, no problem. We are happy to help out. If you're joining us from within the Tradewith channel, then just a reminder, today you have stocks and investing, considering it's Tuesday. So stocks at 9 a.m, investing at 1 p.m. in terms of your sessions in the channel. Mondays, Wednesdays and Fridays, those are our futures and options days. And over the weekend, we do sharpening sessions, which are focusing on psychology, as well as reinforcing the methodology. Now, those are the sessions that are within the channel subscription, but we also do courses that teach certain concepts and markets from the ground up. So the next one is actually the stocks class. I need to change this because the futures class already happened. So the next one is stocks. That's starting this weekend, October 3rd. Then we have a psychology class, starts the weekend after that. Then back testing later on in the month, trading plans later on in the month, and then back testing in November. So I'll show you in a second where you can go to learn more about those courses. But like I said, the next one up is the stocks one. I just need to put the disclaimer there on the screen. I won't read it to you. That'll take me ages. You guys can obviously pause this and read it if you would like to. It is important that you understand the legalities, but not just that. It's generally good advice to understand that, of course, there is risk involved in trading, and that you need to be aware of that. And you need to be, responsible, I guess, for the risk that you choose to take, for the trades that you choose to take, and that, of course, we can help when it comes to educational content and ideas and demonstrations to show you how to do it. But ultimately, the trades you place are up to you. Nothing is professional sort of trading advice or investing advice. If you go to youcantrade.com, you can get additional disclosure information on there. So this is where you can go to learn more about the courses and stuff. So if you go to youcantrade.com, choose the Tradewith channel, you've got the free trial for the channel if you want to try us out. You can schedule a clarification call before you do anything if you want to go through anything or talk to anybody. You can browse our courses. So if you click on that, it will open up a separate window. And on that, you will see all of our courses, and you can learn more about each individual one by clicking on course details for the relevant course. If you click on it, you'll obviously have more information on there as well. And you'll be able to schedule a clarification call through there. Again, before you register for something, you might have questions. So if you click on that button, you just need to put in your name and email address so that we can contact you with the details for the call. You are scheduling a call back. So you're going to pick a time and day that suits you, potentially add some questions. That's optional if you want us to be more prepared with our answers, or you can just leave that blank and we will call you at that time. Once you click request, you'll get a little pop-up message to say that it's been done and that we've sent you a link, and then just check your email for that link so you can be there for the call. Okay, so on the App Store, we have a You Can Trade app, so you can follow us mobilely if you'd like to, if you want to download that on the App Store. Nothing on Android just yet, but it is on the App Store for the time being. So if you guys want to follow us that way, then you can do that. Just search for You Can Trade. Okay, so that's everything in terms of sort of introductions. I'm going to get into the newsletter now. Lot to go through. So as you'll see, the newsletter, which is here on the right-hand side, we show 4 of the major markets in the world. So we have the S&P, oil, gold, and the euro. Obviously, these are all major markets. Lots of money moves through them. Lots of trades moves through them. Lots of volume moves through these markets. You'll also notice that we're looking at a daily chart for each of them. It's one of the most commonly traded timeframes. So hopefully with the timeframes and the markets that we've used, it's relevant to you in some way. Even if you don't trade these markets specifically or these timeframes specifically, obviously everything has an impact on everything else. Even if you don't trade them directly, there will be correlations, I'm sure. So for each of the markets, we go through a few of our sort of major components that we need to understand as traders. The first thing we look at is climate. So climate tells us basically trend, market direction, market environment, but also what are the probabilities associated with that. So we use our Auto Climate app. You'll see it here on the bottom of the chart. I'll show you this per market. The Auto Climate app is analyzing market data for us, and it will come back and show us one of 3 different colored dots. That will tell us the direction and the probabilities. So, by the way, ignore the lines. We're just focusing on the dots and the colors for now. It could show us a thick blue dot. That tells us we have a confirmed upwards climate, probabilities to the upside. It could show us a thick red dot, which is a confirmed downwards climate, probabilities to the downside. Or it could show us a thin dot of either color. The color still tells us the direction. Blue is up, red is down. But the fact that the dot is thin is the Auto Climate app's way of telling us that we have a lack of probabilities. We have less statistical advantage. On days like that, we choose to do nothing. As traders, we don't want to be making decisions and putting our money at risk when we don't have probabilities on our side. So if the Auto Climate app shows us a thin dot, lack of probabilities, we do nothing. So we're going to look at climate per market. So basically trend, market direction, and probabilities. Associated with that is propagating. Now, propagating means how long can we expect that climate to continue based on what usually happens. So on the right-hand side, these numbers show us what usually happens, how long these markets usually go up or down for. If we're in an upwards climate, how long does it normally go up? If we're in a downwards climate, how long does it normally go down? Based on amount of candles. Now, all of these numbers you'll notice have decimal places. Effectively ignore them. Whatever the decimal place says, I'm going to round it up anyway, as to the amount of candles that market would usually go in that direction. And then on the left-hand side, we see where we're at now, how many candles we've already been going in that direction. Now, from these two numbers, we can get an idea as to whether or not we have more probabilities of that climate continuing, or whether or not we've come to the end of that statistical likelihood and that we're more likely to see price change direction. That's why we use the propagating figures. Give us an idea of whether or not we can expect a market to continue to go in one direction or if it's likely to change. Linked to whether or not a market changes direction would be our nearest UFOs. So UFO stands for unfilled order. What that means is where we expect there to be buy orders in a market that can push it upwards, or sell orders in a market waiting to push it downwards. So we use the Auto UFO app to, again, highlight market data for us on a chart, or analyze market data for us on a chart and highlight visually on the chart to us where those stacks of orders are. So if there are buy orders, it shows us as a green UFO. If there are sell orders, it shows us as a red UFO. So it's highlighting for us on a chart where these orders are likely to be. We expect sell orders to push price downwards. We expect buy orders to push price upwards. So we're going to look at each of these per market, so Auto UFOs and Auto Climate. What we're also going to understand per market is volatility. Basically, how far can we expect these markets to move within given periods of time? How quickly they're going to move. So we look at current implied volatility, and we see each of these numbers are percentages. They refer to the expected movement up or down in 1 year on these markets as a percentage of their current value. So the annualized number, what we expect up or down in a year. If we reverse engineer that, then we can understand what that looks like in terms of expected move up or down in a day, in a week, and in a month. So again, we're understanding how far we would expect price to move within these given periods of time, up or down. The climate and propagating will help us figure out in which direction that's likely to happen and for how long. And the nearest UFOs give us an idea of where price might be likely to stop and change direction and go the other way. So again, we're using statistics, probabilities, market data, technology to analyze this for us and give us back where our probabilities are to make it easier for us to make decisions. Again, just because something is probable doesn't mean it's definite. So of course we manage our risk just in case. But again, we're using technology to help us make these decisions much easier because it's analyzing market data for us. Okay, so we're going to go into that per market and then we'll come down and look at upcoming news. It's going to be a big week this week in terms of news by the looks of things. Okay, so starting with the S&P, that's what we've got here on the left-hand side. The S&P is the top 500 US stocks. Auto Climate for the S&P is showing us a thick red dot, confirmed downwards climate, probability to the downside. Now, however, saying that, normally the S&P would go down for 4 candles, and we're on candle number 8. So we've gone twice over what normally happens in terms of the usual move to the downside, the average move to the downside. Now, what that means is we lack probabilities of that continuing to the downside. We're more likely to see price turn and go up. Again, not to say it's definite, it's just more likely to happen. So we've got two sort of forces moving against each other there at the moment. We've got a confirmed downwards climate with the Auto Climate app itself telling us that we have probabilities to the downside, but we lack probabilities of it continuing to the downside. In terms of orders, closest stack of buy orders is here, 3246.59 to 3209.45. And closest stack of sell orders just here, 3401.20 to 3428.92. Now, price has actually taken out over the last couple of days. It has taken out 2 stacks of sell orders, which again is kind of buying pressure. So again, we've got a confirmed downwards climate, lack of statistical likelihood of it continuing, plus buy orders that have sort of pushed through sell orders. So again, kind of indecisive at the moment. We saw a massive gap up, obviously, on the S&P, which again is buying pressure. So overall, it's hard to call. Again, we've got different forces fighting against each other. I tend to not get in the way of that. I will let it decide what it's doing before I join a party. But yeah, that's what we have on the S&P today. Now, when it comes to volatility on the S&P, we would expect a movement up or down in 1 year of 26.75%, which means in a day, an expected movement up or down of 0.56 points, in a week, up or down of 1.24 points, and in a month, up or down of 2.59 points. So that's what we'd expect in terms of movement on the S&P. Again, in which direction is kind of unclear. No probabilities either way at the moment. So we're going to look at the next market, which is oil at CL. That's the continuous futures contract for oil there. I'm just going to move price a bit, make it easier for us to see the closest stacks of orders. There we go. Okay. So for the 4th day in a row, we see a thin blue dot. That tells us that, yes, it's an upwards climate. It's a blue dot, but it's thin. Lack of probabilities, lack of statistical advantage. Now, normally oil would go up for 7 candles, and we're on candle number 4. So we do have likelihood for price to continue to go up for at least another couple of days, but we lack statistical probabilities with the climate itself. It's an unconfirmed climate. When it comes to orders, we're kind of in the middle of them at the moment. We've got 38.05 to 36.92, and we have 42.86 to 44.03. So we're kind of in the middle there at 40 something, not really close to either stacks of orders, probably unlikely to hit either one of them today. Unconfirmed climate, again, lack of decision, lack of direction, really, no probabilities either way. No point placing trades for the sake of placing trades if we don't have probability that it is going to work out for us. So again, we would keep away. So when it comes to volatility on oil, we would expect a movement up or down in 1 year of 40.64%, which means in a day, up or down of 1.03 points, in a week, up or down of 2.27 points, and in a month, up or down of 4.73 points. So again, that's movement up or down expected in oil. Let's look at gold. So at GC, that's the continuous futures contract again there for gold. Just gonna spread it out again a little bit, make it a bit easier to see. Okay, so we have a thick red dot, confirmed downwards climate, probability to the downside. Now, usually gold would go down for 3 candles, and we're on candle number 6. So once again, gone twice over what usually happens in these markets, meaning we lack probability of a continuous move down. We also have stack of buy orders just beneath us there, 1876.9 to 1851.0. Looks like it's literally only just appeared there, only just happened. So again, we have these forces playing off against each other. Confirmed downwards climate, but buy orders beneath us. We've gone past what we would expect in terms of movement to the downside. Closest stack of sell orders just above us, which could push price down, 1907.6 to 1925.5. So again, overall, no real decision either way. We have probabilities to the downside in some cases, probabilities to the upside in others. Again, no real winner here. Again, I would be keeping out of that. So in terms of, okay, sorry, where are we? Cool. In terms of movement, we would expect movement up or down in 1 year of 22.01%, which means up or down in a day of 26.2 points, in a week, up or down of 57.7 points, and in a month, up or down of 120.1 points. So that's gold. Let's look at the last market, which is the euro versus the US dollar. So again, with this one, we're seeing some sort of indecision, not necessarily indecision, but we're seeing different forces working against each other. So we have, once again, a thick red dot, confirmed downwards climate, probabilities to the downside, but normally the euro would go down for 4 candles, and we're on candle number 6. So we have gone past what is likely in terms of a continuous move to the downside, meaning we're more likely to see the climate change direction and go back up. We've also seen price hit a stack of buy orders and go up, which is what we expect to happen. We expect buy orders to push price up. So our green UFOs, our stacks of buy orders there, doing what we expect them to do, which is pushing price back upwards. Now, we do have a stack of sell orders just above us as well at 1.1772 to 1.1900. So again, we have buy orders just below us that have pushed price up. We have sell orders just above us that could push price down. We have a confirmed downwards climate, but we lack probabilities of it continuing. So again, no real clear direction when it comes to which side these markets are likely to be going. Again, I know it's not necessarily helpful if it's not a clear cut, do this or do that, but we don't want to do anything if we don't have probabilities on our side. If we're trying to get involved in these fights between these two forces, we could get caught in something quite nasty, and we don't want to do that. There's no point. It's risking time and it's wasting time and risking money on things that don't have statistical advantage. At the moment, none of these markets are showing us a clear statistical advantage in either direction. So when it comes to volatility on the euro, we would expect movement up or down 7.86% in a year, which means 58 pips up or down in a day, 127 pips up or down in a week, and 265 pips up or down in a month. So again, the volatility figures give us an idea of how far we would expect these prices to move within given periods of time. The climate and propagating should give us an idea of in which direction we're likely to see that happen, or if we've come to the end of what's likely to go in a particular direction. And the UFOs show us where price is likely to turn, which is what we see right here in front of us with the euro. The buy orders have turned price and it's pushed it against the climate there. So again, ideally, we want to see these things line up. We want to see the climate and the auto UFOs and the propagating all working together to give us overall probabilities on our side. We see nothing with that today. Maybe tomorrow, over the course of the high volatility news that we're likely to see, we may see a more clear direction, more clear probabilities in one side or the other. Now, when it comes to news, I'm just going to make this bigger so we can see it. We show this here on the second page of the newsletter. What we do is we highlight, we go to fxstreet.com/economic-calendar, and we filter by high impact news and by US markets. Now, I believe, okay, so it's showing us here that Wednesday, tomorrow, is the next day that we are likely to have high impact news on US markets. The presidential debate obviously is a big one. And then we've got gross domestic product, we've got employment change, and then later on in the week, manufacturing and non-farm payrolls. So things that usually cause a lot of movement in the markets. Again, not to say it will, definitely, but we're likely to see that. I do remember yesterday there being some news that was due to come out today, but potentially, I think that was the presidential debate, and potentially it got moved as to when the impact is likely to happen there. I think that's probably what happened, but you can double check that if you go to fxstreet.com/economic-calendar, and you can filter high impact news, US markets, so that you can see when the impact of these news reports are likely to come out. And again, we don't necessarily make decisions based on what the news says. It's an indirect force. It's not buy and sell orders itself. And what moves price are buy and sell orders, buying and selling. Of course, the news and reports can encourage buying and selling, and encourage people to cancel their orders too. So it usually brings volatility with it, but it's not often very clear in terms of which direction it's going to be. So we still look at objective technological evidence whilst we make our decisions, but we need to be aware of high impact news that could increase volatility and make things a little bit more difficult for us. So just bear in mind today and for the rest of the week, we do have things coming out that could impact us. Okay, so that's me done in terms of content today. Just a reminder, if you want to join us at the Tradective channel into all of our sessions, you can at tradective.com/youcantrade. You can try us out for a couple of weeks. So if you're not sure if the way we do things makes sense to you, or you're completely new to trading, you don't know what to do, try us out for a couple of weeks. If you don't like it, don't worry, just cancel the subscription. If it does make sense to you and we do trade the way that makes sense to the way that you think and your risk and all of those things, then you can continue to join us and you've had a good couple of weeks to really know that it suits you. In terms of courses, and these are for people that are already part of the channel, or they may be people that are outside of the channel that don't necessarily want to subscribe, but they do want to learn how to trade stocks or how to trade futures or how to backtest or how to manage their psychology, whatever it is. So we do various courses. The next upcoming one is stocks. If you go to tradective.com/stocks live, you can learn more about it. And there is a buy one, get one free situation at the moment. Register for any course and get an additional course for free. The second one needs to be of equal or lesser value than the first one. So just go to the website, see how you can put it together in such a way where you make the most out of that offer, obviously based on what you need to learn and how that works with the offer and how you can put it together. If you have questions on anything, just email us at support@tradewithufos.com. We'll see you in the sessions later on today if you're joining us from within Tradewith. So that will be the stocks and investing session. So we'll see you then. And I'll be back tomorrow morning. So I will see you in the morning, guys. Have a good day. Have a good trading day. Have a good Tuesday. And I will see you tomorrow. Take care.